Podcast live stream. Joining me is Justine and Courtney. Thank you both so much for coming on and spending some time with me here on this edition of the live stream roundtable. Before we started recording, Justine, you were about to tell a story, so let's just get right into some storytelling.
Okay, so hi everyone, I'm Justine. You might know me as Miss Financial Fit on Twitter. I'm Miss Financial Fitness on Instagram. Super excited to be here. Jokingly, Dave was like, Justine, this is like your fifth appearance on the podcast. So I'm like, okay, great, awesome. We're the live stream. So I'm grateful to be here, and thank you again, Dave, for giving me the opportunity to show up again for everyone. But yeah. Dave asked me behind the scenes, you guys, he's like, yeah, you're busy running marathons. And I was like, okay, so here's the story, y'all. Okay. So I grew up an athlete. I was a competitive figure skater for many years of my childhood. But I've always just played basketball, volleyball. I've always been active, I've once told the story that my dad, he didn't want me to be on, the basketball team. So he made me quit. So that kind of really upset me. And I decided to go run a track meet behind his back. And when I came home with 3 first place medals. And my dad was like, where did you get that? So I ended up showing my dad that way. And sometimes, you guys, the lesson is that your parents or the people close to you don't believe you until they see the results. You know what I mean? They don't think you're capable of something. But I've always kind of been like a little rebel. Now, fast forward, I was that person that was negative about running. If someone was like, oh, I can run a mile, I can run 10 miles, whatever, I would easily label myself as I'm not a runner. I could never do that. Just my self-talk and self-belief in myself about running was just, it was like zero confidence there. I just didn't believe in myself. And I spoke about myself in that way. But then the freaking world happened, shut down, and I couldn't go to the gym anymore. So I wasn't lifting. I wasn't being active. And because of the athlete in me, I was thinking, I got to move my body somehow. So my cousin on Instagram, she posts this medal, for running. And I'm like, how is she running? Because nothing is open right now. What event is this? So I message her. I'm like, cousin, where are you running? What is this thing? She's like, oh, it's a virtual medal, Justine. You can run a virtual event and they send you a medal. So I started doing that because in my mind, I was like, if my ass is going to run right now, I want a fucking medal, yo. It was not what I wanted. So I basically was like, okay, I guess I'm going to start moving my body like this. And it just started slowly building and building. And then eventually, a couple years, 2 years ago, I said, I'm going to run a 5K. I've never done it. An actual in-person event, 5K. I ran it with my partner and I had such a blast. And my partner's father is a runner. He's a marathoner. He's 82 years old and he's running fucking marathons. This guy is a beast. And I'm like, oh my God. So that's kind of how it started, y'all. This whole marathon thing is I went from literally saying I will never be a runner to when can I sign my next one? How can I want to be a barefoot marathoner. That is the ultimate goal. I'm running in sandals. You know what I mean? I am literally always finding a way to push my body, knowing that I'm this strong, capable woman at 35 years old, kicking fucking ass. You know what I'm saying?
Nice.
So.
Nice.
That's awesome. Wow.
That's my story,
well,
y'all.
This is the athletic version of the Passive Income Podcast live stream because you made some tweets that
I guess
Courtney and I might maybe be kind of pretty good at snowboarding a little bit, sort of, kind of.
Sometimes I like to think that I am. That was a cool story though, and I'll introduce myself really quick. I'm Courtney, aka Staunch Enjoyer, but that's my Twitter handle, X handle, is Covered Calls Barbie. I'm also someone who used to not run that runs now, but I think it's just because I moved to California, and all of a sudden it's I need to go outside because the weather's nice, because I'm not used to the weather being nice. But now it's been a year and it's like, Courtney, you can calm down. The weather's going to be nice every day.
Where in
But
California
yeah,
are you, Courtney?
I'm in San Francisco. How about you?
Oh my God, I'm in Los Angeles.
Very cool. Same thing. Like, it's just like you need ways to get outside. And I feel like running also fits really well with like investing and staying disciplined and that and consistent, which all of
100%.
those like really just work together. Same with lifting and like anything athletic is like you can build on it, which if you like the idea of like the power of compounding in your portfolio, then there's like probably some sort of physical activity that will give you the same sort of satisfaction, but like more tangibly.
Yeah, yeah. I
There's definitely a lot
100%
of parallels there.
totally, totally. I find myself sometimes when I'm on my long runs, I will be in my mind thinking like, "Oh my God, this is exactly like investing. This is like exactly like investing." Where, for example, if it's a long run and I'm going uphill, it's a slow uphill, but I'm going up, right? And I know that I'm taking full advantage of perhaps maybe walking up. Either way, I'm still going to hit the top. And once you go up, you got to come down. And a part of me thinks like when I'm investing and I'm buying, for example, on a low day, buying the dip, it's in my mind, I'm thinking like I'm taking advantage of going downhill right now because I'm basically running a little bit faster going downhill. And I don't look at that as a negative thing. I look at that as like I'm now going to build momentum again for when I go up. So I agree, Courtney. Totally. Tons of parallels.
Yeah, great comparison. Uh, Great comparison there between not just running, but a lot of different athletic endeavors, right? And with investing, where maybe you start out kind of slow, and then you gain a little momentum, and those long runs. Yeah, I was a runner in public school and early in high school, and I haven't really ran since then, but I definitely recall the 5Ks and the 10Ks and the cross countries and running through the mud and everything. And yeah, you just kind of got to persevere and get through it, right? And investing is very much the same way. When you're starting out, it's baby steps. It's very slow in the beginning, and you just have to persevere and get through that. The tough stages, the mud, the cramps, the like everything that that really sucks about running, or everything that really sucks about just that, starting of investing, because in the beginning you're probably not starting out with tens
Mhm.
or hundreds of thousands of dollars, right? You're probably starting out with a few hundred here and there and increasing as you go. I'll just throw it back to you guys and see what your take is.
Yeah, yeah, yeah. I mean, I started with $110, like my first. I think about it, now with ETFs, you can buy like as long as you put like $5 in, you could buy $5 worth of a stock, right? Like fractional shares. So when I'm talking with clients or people that I'm working with, or even just my friends who are like, I need to invest, right? For example, I'll give a good one. I was actually working with a friend of mine. I'm 35, right? So the people I'm hanging out with, we're in the same age bracket. Some of them are even 39 years old. And the friend that I was working with, he's like, I need to start investing, Justine, because like this is enough is enough. Like I can't be I can't be not investing anymore. Like I need to change my life. And I'm like, let's do it, bro. So I sat down with him and we were talking about his debt repayment plan. And then eventually we went into investing. And I told him, I was like, listen, you just put your money in there, right? Even if it's like $5 you have this week, because guess what? If you invest that, you could there are brokerages that allow you to get fractional shares. I explained to him what that was. I was like, so if you're just buying $5 worth of a stock, like you're still in the market, bro.
Yeah.
So just build that momentum because you're gonna hear everyone's like, I put 2,000 in, I put this and that, and I'm like, we all didn't start with 2,000. You know what I mean?
Yeah.
So the baby steps are super important for sure.
Yeah, and the idea that everyone has to start somewhere, like same thing with running and me. I didn't run long distance when I was in high school. I was like hurdles and shorter distance and then along with other sports, but like I had to start somewhere. Like I used to like barely run a mile and now I run really slow for 5 miles, but I'm still not anywhere close to like a half marathon. And I think there's a lot of parallels to investing there and building your portfolio. You have to just start. Um, And then
Mhm.
it also is going to fluctuate. Like there's seasons of life that affect your physical life and then also your investing journey. And I think it's really important to be like, okay, I want to have this perfect like chart that's just up and to the right, increasing at an increasing rate, and invest in the S&P 500. The American economy is just going to be going crazy. I'm going to keep putting the same amount in that's growing at an increasing
Yes.
rate of my income. But at the end of the day, like we don't always have control of that at all, because first off, if y'all could control the economy, I'm sure we wouldn't be on this podcast right now. Y'all would be like running Bloomberg. And then also with our own lives, it would be it looks like life getting in the way of investing sometime. Like I think Dave brought up that I snowboarded and so does he, and we'll have to rip sometime. Like I gotta get to Canada. But
Yeah,
I
that'd
took
be
a
fun.
break after I was working at Robinhood for about 2 years on their margin product, and took a break from working a like white collar or financial services
Mhm.
job in the financial industry. And I went and worked as a snowboard instructor amongst other things while I traveled, and it was really different. Like all of a sudden, my portfolio looks stunted. But why? It's because I was experiencing life in a different way and
Yeah.
still working just at a really different income level than I was before. And I had to adjust that, and my portfolio adjusted to that. But that is life, and like that can't stop you from still building wealth. Because I think still now I'm sometimes randomly in these headspaces of like, what did I do to my financial journey? Like I could have been here, and now I'm here because I
Mhm.
didn't continue to grow. But we have to remember there's actual life, and then there's our portfolio, and they have to
Mhm.
work together in unison.
Yeah.
You're still extremely young. You have lots of time though. So taking that year or 2 years to travel around and go snowboarding and be a snowboard instructor. When I was a snowboard instructor, yeah, I worked a full-time job because, and then, I was teaching snowboarding part-time on weekends
Yeah.
because a snowboard instructor does not make enough money to actually, it's not a feasible career path unless you're a professional snowboarder. But
Mhm.
just teaching a few lessons here and there, you're not paying all the bills. So but yeah, same with me. It was super fun to do it for. I think I did it for 6 seasons, and
Wow, that's awesome.
they were a lot of great times. They were teaching the lessons, then going riding with all the other instructors, and you're just like you said, you're out there just having a great time, learning from the other instructors because a lot of them were extremely good, incredible riders as well. So, um, but I see your point of like, living life on the one side and having your portfolio balance, and then having those two come together and mesh, right?
Yeah, and I think one thing I'd love to hear y'all's thoughts on is I feel like on Twitter, especially, or X, sorry, it's still hard for me. It's been so long now. I don't know why.
You're
On
not
X,
alone. You're
you
not alone.
right?
No, we all
Like,
still call it Twitter.
We
yeah,
still call it Twitter.
yeah, but on X, Twitter, whatever we want to call it, you see a lot of this mentality that I think is so healthy and so good for all of us to learn. And I need a lot of, which is like a high savings mindset and like saving most of your income, investing most of your income, fire,
Yeah.
retire early, all of that stuff. How do y'all feel like you work through and like make content about your own life and like also just live your own life with a balance between that mentality and trying to live your life? So like maximizing your portfolio, but also maximizing your life pursuits.
That's a really good question. You know what? Okay, Courtney, first of all, girl, you just said a lot of stuff that I love, And I think, um, okay, so Dave, you might remember 2 years ago, I got into a really bad car accident. Remember, I posted it on Twitter. On Twitter. I'm going to call it Twitter. Just going to call it
Yeah,
Twitter.
that's fine.
Let's
Um,
do it.
and that year, I was investing like 1,200 a month, right? 1,200 a month. I was kicking ass in terms of like putting money into my portfolio, my investing portfolio. I was investing. That wasn't even including savings. And then I got into this car accident and life just happened. And I'm trying to find the words, but it took a very long time for me to just mentally get right again. And I think I don't think we have enough of that honesty or transparency on Twitter sometimes. or on social media, like everything is all fucking like daisies and
Sunshine and
roses.
rainbows and
Yeah. I'm like,
unicorns, right?
there's bunnies,
Totally.
but my 1,200 that I was investing each month drastically dropped, right? Drastically dropped. And for me, I was kind of beating myself up a little bit because there was a part of me that was thinking like, fuck, like I'm out here on Twitter and I'm posting my numbers and now it's going to be lower. But then eventually I had to like tell myself, nah. If these are like people, this is your community, they're going to they're going to respect you no matter what you put in. And if you lose followers, then fucking so be it. But that was my mentality, because in my mind, I was like, I need to worry that I'm good here right now mentally, not worrying so much about what other people are thinking of me, because I was in such a bad, dark place for a long time. And I cut my investing portfolio, how much I was putting in each month. I DCA. So regardless, I just put money in. But I went from like 1,200 to like 500. But in my mind, I kept telling myself, I'm like, you know what, Justine, all your friends on Twitter, all these people on Twitter, they're posting great fucking numbers. But right now, life is lifing for you, boo-boo. And you need to be kind to yourself, you know? And I don't think we tell each other that enough, because for like just be kind to yourself, because life is lifing, y'all. I don't know. Like maybe your dog passed away, maybe someone in your family passed away. And then like at the end of the day, all this money that you have and all this financial portfolio that you have is not going to bring back those people or the things that matter. You get what I'm saying? So Courtney,
Totally.
for me, my mindset shifted, right? Shifted.
Yeah.
To the point where it's like, that's why I started posting more about running and posting more about working out and what's happening in my day to day, and not so much about, I still post about dividends. I still post about finance because I love that. But I also am sharing a part of my life with the community and letting you guys know what else I'm doing, because it's not just about building my financial portfolio. Does that make sense? Like,
Totally.
Yeah, a couple of great points there that I just first, that 1,200 a month, obviously you're laying an incredible foundation there. And then yeah, like you said, life happens, you get in a car accident and suddenly it drops. When you said 500, I'm thinking, geez, 500 is still a lot for a lot of people, right? So you're still doing really good even at the 500 mark. And
right.
500 is a lot more than zero, which is what a lot of people out there are putting away each month. So anybody who's putting even whatever it is, 10, 25, $50 a month is, so much more than zero, right?
Right.
So
Right.
much more than zero. So,
Yeah.
even at 500, I'm saying like tip of the hat to you, hats off, especially when you're going through that where, you're struggling with, probably you got a little bit injured from the car accident. There's probably some, mental things going on where you're like, what the hell just happened to me and all that stuff. Right. And so
Mm-hmm.
I think it sounds like now later you're sort of come through the other side of it, and, you know, whatever doesn't kill you makes you stronger, so to speak. And you've lived through that. You've come through the other side, and here we are now.
Yeah, exactly. Exactly. I think you make a really good point, Dave, because you're right. 500 is still a lot.
Yeah.
500 is still a lot, which is why that shift happened, where it was like, just be kind to yourself, Justine, because at the end of the day, this is still stellar amount to put in, versus maybe putting in 100 or whatnot. But like, that's why I think when I'm working with clients, when I'm working with my friends, with people, I just tell them like, listen, even if you put 5 in right now, just put 5 in. You
It's
got
so
to
much more than zero, right? It's
Yes.
just so much more than zero.
Just put it in your freaking Roth. You're going to be all right, my friends. Or like, let's make sure if you have a 401k, you have a retirement account, like, let's just make sure you're invested. Like, it totally shifted, you guys, the way I looked at things. So that's why I'm like, yo, if I see people hating on Twitter and they're like, oh, that's it, I'm like, block. I ain't got time for you. And I know my community, whoever's following or whatnot, they don't have time for that shit either, So yeah.
Yeah, I totally agree. And I think it's interesting when you talk about life is lifing, like it's really good to think about what kind of financial situation you're setting yourself up for when life is lifing. I think there's the one side of the equation where you've got, some people say, up to 6 months of expenses in a savings account as like an emergency fund, which I think is really important. And you see the emergency fund conversation come up a lot on X as well. And then there's the other side of the equation, which I kind of want to talk about a bit and hear y'all's thoughts on, but where you have your portfolio, and both of y'all, I think, talk about passive income. You're the passive income posse, Dave. And then you talk about dividends, Justine.
The Passive
And
Income
yeah, there it
Posse.
is. I gotta get one of those hats. Like, I gotta wear it next time I come on. But yeah, so y'all talk about dividends a lot. I think I quickly want to talk about covered calls and then hear y'all talk about dividends in the same context, but for covered calls and that income strategy that I don't really consider passive. It's the most passive of a lot of the option strategies you can deploy in your portfolio, but it's actually very time intensive, which is a challenge because, yeah, when life is lifing, it's hard to write a covered call. I mean, I'm experiencing that in the last couple of months. I've sold way less covered calls because of anything from travel to like family things or personal life issues. I haven't sold a covered call in a few weeks actually. So with that, like, I've already set my portfolio up to where on a rolling basis, I'm kind of managing my covered calls every month in like a big way. But I'm definitely missing a lot of income here, which I think is why I'm excited to hear y'all talk about why y'all are passionate about dividends, because I like talking about dividends, even though that's not the strategy I currently have. I definitely give my fair share of dividends, but when it comes to writing a covered call and collecting premiums, there's so much risk there that it has to be managed still, even though it's less risk than other strategies. And same thing with a cash secured put. I mean, you have a lot of money on the line there. So yeah, I'd love to hear y'all talk about dividends and that passive income strategy for when life is lifing.
Dave, you know what, Dave? I'm gonna let you take this one first because it's we gotta get you in the conversation, friend.
Yeah, sounds good. So I've had several guests here on the Passive Income Podcast: Leah, the trader, options trading Chris, several others talking about options and covered calls and cash secured puts. And honestly, I still don't understand it. Like and yourself as well, Courtney. You know, and I hear all these words and terms, and so that's part of why I'm more into the dividend strategy. The other part is the amount of time I think it would take while the market is open, right? Like that 9:30 to 4 p.m. Monday to Friday. Well, that's when I'm at my day job. And I can't be, well,
True.
I do obviously click around my screen, but I can't be just focused on the stock market screen or have three screens on stocks all day when I'm actually working as well. So that's kind of why I lean towards dividends, because it's just like I just buy companies. I know that every month or every quarter that dividend is going to hit my account, and that
Yeah.
it's show me the money. There's cash there. There's cash to then reinvest. And yeah, sure, every 2 weeks when I get a paycheck, I transfer a little bit into here in Canada. It's called Wealth Simple. Is very similar to your Robinhood in the US. And it's so easy now on your phone, a few clicks on your phone, and you transfer money from your bank account into your brokerage account. There's
Yeah.
then there's almost I almost always have some dividend money in there as well. So then it's like I just buy some more, and then the next month or next quarter, it's just going to keep increasing, and then you just watch that snowball continue to grow. And that's sort of um my 2 cents of the sort of the dividends. And I don't want to say dividends versus the options trading, because it shouldn't really be a competition. It
Totally.
should be what works for you, right?
And por qué no los dos? I love getting a dividend and collecting a premium on a covered call for the same stock. Like, that's just ideal. Ooh, dividend
Uh,
boomer with the question.
do either guest purchase options, or do they only sell options? Sorry, Boomer, I'm having a hard time reading.
Good question, Boomer. I very rarely like purchase options anymore. I used to. When I was like at Robinhood and really on the grind, like in the trenches, I guess. It was like, how could I not? It was so fun. Which is bad in some ways, like that I said it was so fun. I think that says the whole story. And why you have to be careful with it is first off, there's even more risk there, in my opinion, because it's like, again, than a covered call or cash accrued put. It seems less strategic. If someone wants to prove me wrong, I love talking about it. So if any follower hears this and is like, you're wrong. But on the sell side, that's my main strategy, because you can calculate it. You can write conservative calls on long-term holdings that you have conviction on, and conviction that might have growth, but like at a steady rate. So I can write a conservative enough covered call at a strike price in a range that I'm comfortable with, and then collect that premium on top of that growth. That's just the bread and butter. So, and one last example I have is one time I was like so sure I was right, and I bought this put on a company that put out some bad press, and I was like, okay, the put's price is going to go up. The company has some bad news. The stock price is going down. This math just makes sense. This is logical economics, an efficient market. And it was like 1 + 1 = kitten. The price of my put went down. And yeah, hopefully that answers your question of why I don't sit on the buy side anymore in my own portfolio.
This is another one for you, Courtney. Do you make decent money from selling options? How much capital is required? So I do know the first answer to that is you have to have 100 shares of whatever stock or company, correct? So that's
Yes,
the
sir.
first part of
So
it.
that's part one, which again is hard. So this is a great question, and I actually met with a woman and spoke about this over coffee. That she was in San Francisco, and it was cool because I actually got to meet with like a follower in person, kind of, and we talked about upfront capital, and that expenditure is extremely difficult. And I
Well,
don't think
especially if
I
it's
do
going
a
to be
good job
Apple or
talking about it
Tesla,
on
right? Like 100 shares of Apple or 100
totally.
shares of
Yeah,
Tesla, that's
yeah.
a lot of money.
I know that's massive. So I don't think I do a good enough job talking about that on X, because it's difficult to talk about. And it's hard to be the perfect financial creator. But capital expenditure and like that upfront cost is really difficult to start earning that income. And it took me a long time, and that I've been investing over the last few years to build up to these positions where I'm able to sell covered calls on them. But I did start smaller, so that's a big thing. But then with smaller stocks, you don't get the same premiums, and then also a lot of time you get more volatility, which increases your risk of assignment. So all of that is really important for. I can't remember who asked the last question, but upfront capital is a really challenging barrier to entry with covered calls. Thank you. And then
Wealth
decent
or
money.
infotainment.
Infotainment. Love the name. Decent money, totally, but I mean, it's all in perspective. I built and focused on like AMD, Apple, Hood, which is a smaller dollar stock I write covered calls on, but those are three of my main holdings I do sell covered calls on. And the premiums are solid. I write conservative covered calls, so I'm not collecting these like sexy premiums. But at the end of the day, it adds up over time, and I'm able to really supplement my actual 9 to 5 income really well with it. But it took me a long time to get there. Like, it wasn't until the last year or so that I could sell covered calls on these, because it takes so long to build that even lot, which is 100 shares of these positions with price points over $100.
Right. I hope that answers the question. I think it does. Uh,
Great
Great point
question.
there.
Infotainment.
Yeah, great point there about like 100 shares. And again, if it's Apple or Tesla, 100 shares times $200, that's a lot of money to start out with. So right away, that's obviously a higher barrier to entry for a lot of people. Whereas, like
Mm-hmm.
Justine pointed out earlier, $5 or $10, and you can start buying fractional shares, right? So um, definitely two very interesting and unique aspects of investing. And again, I'm not saying there's any right or wrong way to go about it, but yeah, just I think that just getting started part is the big one, right? Whether it is the 5,
Mm-hmm.
10, 25, $50, just people have heard me say it before, just get on base. Just get on base, right? So,
Yeah,
oh,
totally. I
we
think
need more comments in the chat.
those were good though. And I think I'll quickly say, like, for the get on base thing, where I started with covered calls, because I think there's a little bit of intrigue or interest in the comment section there. is in my Roth IRA, I was like, okay, I kind of want to make this a little bit more focused of a portfolio strategy. So I chose a few stocks that I wanted to put it in and I wanted to primarily hold. And then whatever I didn't allocate towards two individual positions, I put in SPY, S&P 500. And never investment advice. But I should say, like, I like used to be a financial services person. And long story short, I just slowly every year since I was able to like produce the income level to max out my Roth IRA, I was focusing in on an individual stock, whether it be Amazon. I also did TSM because I'm bullish on the semiconductor sector. And so from there, after I think it was like 2 years, I was able to start writing covered calls on TSM. Now I'm almost there with Amazon. And then I want to get there with SPY as well, and then continue to build on those holdings. But it was that whole get on base thing where it's like, okay, I want to sell covered calls on stocks that I have a little bit more longer term conviction on, because when I started selling covered calls originally, it was also like on more closer to penny stocks, like not quite under that $5 range, but in those lower dollar holdings that have like the extreme volatility and the premiums don't really make as much sense in terms of like expiration. And then there's a lot of other risk that comes with that. But getting on base is important when it comes to covered calls. And I also know it's important when it comes to dividend investing, because yeah, if you stop continuing to build on your position, what happens to your dividend payments? They don't grow. So like, I
Unless you
think
get a
that's the thing
dividend
y'all
raise,
probably
but
have to
even
do.
then, yeah, you still want to
True.
accumulate, right? You still want to accumulate.
Yeah, how often do y'all see a dividend raise that helps you build that position without actually having to put more in that builds that position?
I'd say often, right? When they do their earnings call, it's nice to know that's like, hey, it's going up, the dividend price. So
That's
again,
great news.
yeah, I mean, I like it. So I hold a lot of Glad, and I pushed a lot of Glad earlier on. And now at this point, I've got a fat dividend that comes in. I don't reinvest that into Glad anymore. And I've been putting that into Schwab's high yield dividend. So SHCD, right? So I've been putting it into that. And I like it. I enjoy it. I like this move. I had some people on Twitter like, Justine, don't do that. And I'm like, but I think it's good for me that
Yeah.
I've made that decision, because I've got ridiculous amount of Glad in my portfolio, and I'm thinking, okay, hold on, I got to balance this out, So I've got to make sure that it's not too much of this particular stock, dividend paying stock. So yeah, most of the time it's good news with with the dividend stock prices going up, the share prices going up. Yeah.
Yeah.
Yeah,
Great
I'll
news.
talk to that a little bit too. So I know I don't own it, but I know that Realty Income ticker symbol below, like they raise their dividend by a little tiny fraction. I think it's like every single quarter, and they pay monthly. So that if you
Yeah.
hold that one, that's a nice one just to see it. I think that's even just more of a mental thing, seeing it going up every 3 months, which is nice. Generally for the dividend raises, you see them once a year usually, sometimes more often. But the other side to that coin, which is definitely not as sexy to talk about, is the dividend cuts, which happen as well. So I
Yeah.
suffered I suffered so many dividend cuts in 2023 because I was and still am overexposed in the REIT sector. And REITs, real estate, got hit extremely hard with interest rates and inflation and everything. So, yeah, if I told you how many, dividend cuts I had in 2023, you would cry because I did.
That's such a interesting thing that I don't think about because I'm not a dividend focused
Mm.
investor, is like dividend cuts and like the interest rate environment that we're in the United States. At least I can't really speak on Canada. I'm not going to try. But
Yeah.
I know like that's got to be hard, as it's difficult with covered calls, but it has a very different effect if you're in that strategy. But it looks like we got another question.
Well, it's kinda related to what we're talking about, dividend strategy. If a long-term hold is down and has some bad news or cuts dividends. So, well, exactly that. Sometimes actually, Nick and I were talking about this yesterday, at Smart Net Worth, Nick. how
Yeah.
sometimes like a dividend cut could be a good thing if you look at it that way, that, okay, so yeah, they're taking money away from paying it to the shareholders, but now they're freeing up that capital and that cash to either to pay down debt, to invest in R&D, to buy back shares. There's, literally a plethora of other things that they could be doing to help make the company stronger again, right? So,
Hmm.
yes, it hurts the bottom line and it hurts your dividend investing strategy, but at the end of the day, hopefully they're doing it for the right reasons and making the right choices. And then eventually that should lead to, the share price appreciation. And then I've also seen it too, where the companies have done a dividend cut and then a couple years later start to slowly raise them up again. And it takes years because quite often
Yeah.
they'll cut by 40 or 50% and then raise by a few
Brutal.
percent each year, right? So, um, it's part of the as Nick said yesterday, it's part of the game that we play. And so yeah, the dividend cuts sometimes you just have to like live with them.
So do
Yeah,
you hold?
and what do you? Oh wait, you go,
I'm sorry. I
Justine.
was going to say, so Dave, do you hold? I'm assuming then that you hold. Yes. Do you just
Yeah,
hold
I
on to that dividend and and hope that it goes up?
I did sell a few positions last year.
Gotcha. Yeah.
Basically they were just complete dogs and it was just like cut my losses because I've been waiting too long for these to try to rebound and they're just not going to.
Hmm.
Yeah, and then I just for the most part though, those dividend cuts, they were relatively smaller positions and smaller dollar amounts, which at the end of the day still does
Hmm.
hurt the bottom line.
Yeah.
But they weren't like 15-20% of my portfolio. They were like the less than 3-4%. So it still weighs on you mentally a little bit, but
For sure.
at the end of the day, it wasn't the worst thing that could happen. And like I said, I'm still holding them because hey, instead of getting say $10 a month, I'm getting $5 a month. Well,
Yeah.
okay, I'm still getting something as opposed to nothing.
Yeah. Yeah.
Can you
True.
elaborate high yield stocks versus growth stocks, which are better for a beginner investor? Um, you want to take that one actually, Justine, because I know that you spend a lot of time dealing with people getting out of debt and getting them beginning into investing.
Yeah. I mean, oh, this is not investment advice, y'all. This is
Never
not.
is. We're just people having a conversation on the internet, right?
Yeah. Um. Okay. I think this. I'm like all a little hesitant right now. Yeah, okay, let's see. Can you high yield stocks versus growth stocks, which are better for a beginner investor? And then Courtney, of course, if you have anything you want to add to this, just in case,
Totally.
please do. Um, I think it's good to do your research first, as always. As always. What I personally like to do is if like you are a beginning investor, I tend to tell someone to look more into the ETFs, right, and index funds, because you're going to get more of a diversified selection of stocks and shares
Yeah,
uh, in one fund, right, versus having to look at individual stocks and really doing the research. Not that I'm saying that you shouldn't do the research for the index and ETFs, because you always should. But if you're a beginner investor, I think that is your best bet because that gives you exposure to several different companies, top performing companies in the stock market. I would also say this, like just because it has a high yield doesn't mean necessarily that it is a good stock.
yeah.
Hmm.
Don't chase yields.
Yeah, don't yeah, exactly. I wouldn't chase the yields. It's very appealing because you're like, "Oh my gosh, that's going to pay me a lot." But just because it's a high yield stock doesn't necessarily mean it's a good stock. And then I would also say growth stocks, um I think of like the blue chip companies, right? So your Apple, your Microsoft, like your Chevrons, the ones that have performed well over time historically. Those types of stocks, I think are, you can, what's the word I'm looking for? You can, that it's through history, right? Looking at the history of that company, that it has performed well over time. And so that may bring some peace of mind as you, when you're looking at stocks to invest in. But again, I think if you're like a beginner investor, don't chase the high yield. Blue chip companies are great because they've performed well historically. But if I'm a beginner investor, I would find index funds and ETFs more appealing, and perhaps I don't want to say safer, but gives me better exposure to the stock market. Dave, Courtney, if you want to add anything to that.
I'm going to jump in there before I hand it over to Courtney. So a few minutes ago, you mentioned SCHD, and then so exactly right. You look at a fund like that has your. I don't know exactly every company that's in it, obviously, but I'm just going to name a bunch that I think are in it, like your Coca-Colas, your Home Depots, your McDonald's, probably maybe Procter and Gamble or J&J or those types of companies. And then it's like, imagine trying to get 100 shares of every one of those companies, right? Like the 100 shares of Coca-Cola, 100 shares of McDonald's, 100 shares of whatever other companies are in that SCHD, where you get 100 shares of SCHD and you have that little piece of all of those companies. So I definitely agree with everything you just said, Justine. Again, not financial advice, but starting out with ETFs and index funds definitely is probably for the majority of people a really good way to go. Courtney?
Yeah, I was just gonna say ETFs are appealing. What a great phrase. Because they are, and there's a reason they are. They help you build a diversified portfolio while holding one position, one ticker, and you can invest in fractional shares, so you can put as much or as little as you need to. I mean, depending on the platform. I guess the only thing I want to add is, like, with any investing strategy, there's risk, but specifically with growth investing, is there's always the risk that things stop growing. We have to remember that. So it's like, oh, if you're going on a higher risk kind of direction with your growth stocks, if you're like looking at more volatile positions or like stocks that just are riskier in general, you have to be prepared to like lose all of that. I think is a great mentality, because setting expectations is important, so you're not caught off guard later and you can have financial wellness. So with growth investing, it's good to keep that in mind and know that, I mean, look at the economy right now. Like, this interest rate environment is making it hard for a lot of businesses to grow. And keep that in mind when you're holding growth companies, because they're very reliant on cheap debt to be able to grow. So little things like that you have to keep in mind. So it's good to give that diversified portfolio a try if you're new. And that's why ETFs are appealing. And I like the concise phrase there.
I'm going to give it, an example here too, like what Courtney just said. What happens when a growth stock stops growing? 15, 20 years ago, the darling of the tech world was this little Canadian company called BlackBerry. And I know people have heard me talk about BlackBerry before. 15, 20 years ago, everybody had a BlackBerry. People, like, it was in part of popular culture in movies and TV shows, and people didn't say smartphones, they said BlackBerry. And not a single person in the world has a BlackBerry anymore, right? So you definitely have to kind of, watch out for those types of situations and scenarios as well. With that said, BlackBerry is still a company. They still do trade on the TSX, but they're totally out of the smartphone game. They're now into like cybersecurity and that stuff. So that's just a little side note.
Yeah, it's actually funny. I like originally, when I first started doing covered calls and selling them, BlackBerry was one of the first stocks I used, but because it's like a easier upfront capital, fixed cost there, to buy that many shares. But I think it's somewhere around like 8, but I honestly never look at it anymore.
Well, in Canadian dollars, it trades in that 5 to 8 range. So in US dollars, probably somewhere in there, what you just mentioned, which is really crazy because at the peak, I think it was up over, I don't know, 120, 150 Canadian dollars. Like, it was a very high valued stock at the peak of BlackBerry. And then basically iPhones came along and BlackBerries disappeared in a heartbeat.
Yeah.
Totally.
One of the things I wanted to mention also was, going back to an ETF, is that these index funds and ETFs, they're self-cleaning, right? Yes. So if there is a company that is maybe not performing so well, they're taken out and replaced by the next top performing company. And so again, for me, I find ETFs and index funds incredibly appealing because it can, especially for a beginning investor who is like still learning the ropes, like it is literally helping you out, like saying, here you go. Oh, by the way, that piece of the pie, it's missing a blueberry. I'm just going to take that out and replace it with a slice that has all the blueberries. You see what I'm saying?
Yeah,
So
exactly.
it just makes it easier for that beginning investor to get in. It takes out extra brain work. And I think to myself, you guys, like going back to life is lifing. Like, Courtney, girl, I ain't gonna be sitting in front of a computer doing covered calls all day. You know what I'm saying? Like, it's just not, I'm not going to do that, right? I know I'm not at that, I don't have the capacity to do that right now in my life. And so when life is lifing, I want to know that I'm building wealth and I'm a long-term investor, and I'm gonna like, I want to know that I'm investing in an ETF or in an index fund that is like working for me. Does that make sense?
Yeah.
But yeah, there are tons of people on X who are like strong dividend investors, and they're over here like, I'm gonna take out here, I'm gonna and put in XYZ and da 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 da. Like there are some that are really into that part of dividend investing. Yeah.
I think another great point there, what you mentioned about the ETFs and index funds being self-cleaning. Sure, you might be paying a little bit of a fee, but basically you're paying that little tiny fee for a professional money manager to do the work for you, right?
Mm-hmm. So
or if it's like not an actively managed fund, like essentially like a robot to do that for you.
Yeah.
Next comment here again, Wealth Infotainment. Thank you so much, Wealth Infotainment, for joining in today. Do any of you use technical analysis for long-term investing, or just go with fundamental analysis? So
Yeah,
yeah,
that's
I'm
a good
basically
question.
fundamental
That's a
analysis more
great
than anything.
question.
Just
Did you ask me to answer that one?
whoever wants to take it.
I tend to go with, I'm a long-term investor, so I tend to go with fundamental analysis. Yeah. What about you, Courtney?
Yeah, the hard-hitting questions. I
Yeah,
used to
no, I'm
love
like, that's a good question. Yeah.
the tea and day. Like we used to talk about it all the time at Robinhood of just like people who love technical analysis, and like I jumped on the train for a little bit, but ultimately it's not my cup of tea. But I love hearing people that know a lot about it talk about it, because it's like, yeah, like it's gonna pass like the resistance level or the support level. You're so right. And I'm like pumped up. But at the end of the day, I don't have the ability to do that. My brain doesn't quite work that way. And that's one of the reasons I started doing Stonk Enjoyer, is because you can still be someone that trades options and have an options strategy without being someone that does technical analysis. Sometimes there's that barrier to entry. It's another barrier to entry that for covered calls or cash secured puts, which are like a great income strategy if you know how to do them. And I believe you don't necessarily need technical analysis for it. I think you can totally use it, and it's probably great. It would probably really help me. But I get, at the end of the day, living my life and like the way I like to use my time, just investing in fundamentally sound business models and then writing covered calls on top of that that are conservative. That's going to be my thesis that I stick to. But technical analysis is super cool.
I would definitely agree with everything you just said there, Courtney. I don't understand TA fully either, but I do love hearing the people talk about it. Like you
Oh
mentioned,
yeah.
resistance and support, Fibonacci, cup and handle pattern,
Yes.
double top,
It's lit.
all these like just amazing terms, and you're just like, okay, that's pretty cool. And I mean, I have learned a little bit about technical analysis. I again, I
Same.
don't really use it because I am more of a long-term investor. It's like I know what I'm basically I know what I'm buying. I'm buying Canadian banks and Canadian blue chip companies for the most part, and way too many Canadian REITs apparently. But yeah, so for the most part, I don't really need the technical analysis. I know Canadian banks have been around for 200 years and they're not going anywhere for the next 200. So I know that they're safe. Are they going to trade sideways for the next 15, 20 years? Maybe. Are they still going to pay dividends for those next 15 or 20 years? Definitely. So, it's just less of a need for the way I'm investing, right? But yeah,
Mhm.
it's very cool to watch and listen and even learn a little bit more about, right?
Have you ever had a technical analysis guru on the Passive Income podcast?
Uh,
Ooh,
I
that's a good question.
well, geez,
Yeah,
I
that'd be
okay,
cool.
I- Courtney, you have to go back and watch all 120 some episodes and all the live streams, and you let me know.
I'm working on it. Yeah, I'm working on it. I'm probably like 15 in, so I need to watch more.
I can't recall anyone off the top of my head. Night Trader author Dave Greta, I know he's pretty good at it, but when he was on, we didn't really talk
Yeah.
about technical analysis much. He's very much more focused on sort of the mental aspect of investing
Yeah.
and that type of thing. So he would probably be the closest, and that was several way long ago, a year ago probably that he was on. So
Yeah, and I think you just said an important note there is you said a mental aspect of investing. And I think that's one thing with like technical analysis or being on the buy side of options or anything that's extremely time intensive slash mentally requires a lot of mental planning and
Yes.
education. Um, I'd love to hear someone talk about the long-term sustainability of managing a retail portfolio that's probably most likely personal, um, and using one of those strategies that goes beyond like spreads or oh yeah, wealth infotainment, great cues, but goes beyond like spreads or collecting premiums on being on the sell side of options.
Yeah.
Dave is doing a great job. You're
well,
so
thank you.
right.
I could not do it without all these incredible guests. My beautiful California girls on this episode of the live stream.
Whoop, whoop.
Woo!
California. I'm originally from Texas though, so I can't like claim California. But
It's okay.
thank
You
you. This hat is so California. I just threw it on because I had bedhead and it's 8:30 and I'm like, oh.
Yeah, that's also thank you for getting up on your Sunday morning and being with me. Um, it's definitely the time change is always a little bit tricky, but we tend to make it work on weekends. So I appreciate your time and coming on here. Let's just open it up. Is there anything else we want to talk about before we sign off? I see we're pushing an hour here. We're going to be over an hour real soon. I've got plenty of time, so if you want to keep talking, feel free.
Yeah, this has been great. Thank you so much for having me. And Justine, it was so great to meet you. And I'm excited to like get to follow. I need to follow your Instagram. So because I don't really use Instagram for Stonk Enjoyer, but it's so great to meet another woman who's passionate about investing too. I think that's the last thing I want to say is what got me excited about this conversation. And what makes me excited about people like interacting with it is I feel like that's something I want to see more of is like
Mhm.
females talking about investing and talking about portfolio management and like economic headwinds and all of those things that we're seeing right now and like and like be able to just have conversations about it as well. So Dave, I really appreciate you taking the initiative to put these conversations together. And then like Justine, just round of applause. Like it really makes me excited. And that's something like I'm really passionate about is like females taking like females experiencing the power of compounding and like taking their own financial wellness into their hand and just rocking it.
Yeah,
Yeah.
well,
Yeah.
you both know from the group chat on Twitter, this is Female Investor Month here on the Passive Income Podcast. We have another live stream with a couple other great females coming up. So,
I
yeah,
know.
Yes.
and definitely when I started doing this was just I wanted to give an opportunity to let everyone have a voice. So I see Tim is still here saying Southern California in the house. So all of California is watching this morning.
We're all up.
Wake up, California.
I know. I'm so grateful, Dave, for you. You honestly, like you brought on some wonderful people onto your podcast, and I'm really super stoked that you are bringing the women together. I don't think I've
Appreciate
seen
that.
anyone else do that, and so it's just really nice, Dave, to see you kind of spearheading that, saying like, all right, ladies, where are my ladies at? Because I want you on here talking about investing. Courtney, it's
Mhm.
super stellar to meet you. Like you are a wealth of knowledge, girl. Damn.
Yeah.
Bam, you are so
Yeah.
good with calls, with just everything. And it's nice
Thank
to meet
you.
another female who is rocking it in the investing space. I have done kind of a bit of a shift, especially over probably the last few months, and really serving more women and domestic violence survivors, and how to kind of reclaim their money and their
Yeah.
body and their physical and their strength, because they lose all of that in that type of situation. So if you
Yeah.
follow my Instagram, it's shifted more towards that, that population. But I just think it's important. That's why I kind of stress like low barrier of entry, ETFs, fractional shares, because I want to help women, and particularly domestic violence survivors get into the market, because they need that, right? Aside from just life is lifing and they're trying to survive. So I've got a huge passion, and a lot of my content and a lot of what I do now is geared towards them and getting them invested. So if you
That's
want,
awesome.
follow me on Instagram if you want to see that part of the journey, but I'm also on Twitter, on X.
Yeah, I was just going to say, I saw that one comment come up asking if you were on Twitter, and the links to both of your Twitter handles are in the description below. So at Ms. Financial Fit and at Covered Calls. No, you're at Courtney MMMMM.
I'm at Courtney MM. The Twitter used to be personal, and then it kind of took off, and then I made it into more of a brand thing, and so it's the classic. But yeah, that was really cool to see. And yeah, also shout out like Investies for All, and like this was just such a fun conversation.
Yes,
Baby rock.
Yeah, thank you. I appreciate all the kind words from both of you and so many other guests here that have just showered me with compliments, and it's starting to go to my head. I'm not gonna lie.
You're awesome, Dave. I wish I could be in next week's call with all the other females.
Yeah, Courtney, feel free to come back if you're available.
I'll keep you posted. But yeah, and thank you to everyone that tuned in today too. Like it just shows your support and like respect for women in the financial space too, which I'm not gonna pretend like that's not a big deal. And like it's noted. So thank y'all.
Courtney, you did mention about getting a Passive Income Posse ball cap. So the Passive Income Posse t-shirts, hoodies, toques, ball caps, and coffee mugs available at buyinvestingshirts.com. Use code word Posse for 5% discount, link in the description below. But here's the best part of it. Here's the best part of it, Courtney. You can receive a free Passive Income Posse turn that cash register around coffee mug with any purchase over 100 Canadian dollars. So what's that, like 73 USD? Before taxes and shipping at buyinvestingshirts.com. Use code word Posse, link in the description.
Okay, I'm doing it. I'm tired of that old hat. It's already gone. So mentally, I'm already in a hat. Pretend like I'm wearing the hat.
Oh, okay. We have another comment here. Please bring Dividend John again. Yeah, actually, he was going to be on a live stream, and then life happened to him, and he ended up having to go to a funeral there on the last live stream we did when it was all the Canadian boys on. So.
Oh, no.
Yeah, so we will have Dividend John back on again at some point in the future, for sure.
Awesome. Dave, Courtney, participants, thank you so much for all of this. This was great. What a great way to start a Sunday morning, right?
Yeah, I feel like you're both like energized, energetic. You're both going to go for a run, aren't you?
Probably. That's definitely happening.
Awesome. Well, again, thank you so much for your time. This has been an incredible conversation. Learned so much about both of you again, like, and going back to that, the athletics and the investing and the parallels, just absolutely amazing. If you're still watching here, we have another comment. Oh, happy Sunday. But we're trying to wrap it up and you guys just keep commenting.
Love it. We love it.
I love it. Yeah, so thanks again, everyone, for tuning in, for commenting. A special thanks to Justine and Courtney for being incredible guests on this episode of the Passive Income Podcast live stream roundtable. If you're still here watching nearly an hour later, if you haven't done so already, please hit like and subscribe.
Awesome.